Welcome to readtheticker.com. Today we're going to talk a bit more about the indicator called the Chandelier exit. Here we have two entries of the Chandelier exit. It is a fast one, which is 22 periods 3.5, and a slow one, which is 66 5.5. The reason why I like this indicator, I've added it recently to the site, is because it supports our Wyckoff logic. If I open up my remind me box, here on the left hand side you see a basic step pattern where price goes up, breaks resistance, forms support again, it keeps on climbing up a nice little step. So it's working between the support and resistance lines, as we see in our Richard Wyckoff roadmap. And we're sort of seeing what happens with the spring, the test of the spring and other tests as price steps up. Now ideally, what you want to see is price advance with a good high, a new high, and a good lower low. And you want to see price pull back in a moment of weakness where you can take an opportunity to buy it. Well, this chart's interesting because I've actually got a setup here. This is one I've got a bull Chandelier exit set up. And down below I've got a bearish Chandelier exit set up. Now when I say bull or bear, I mean you just set the settings to either be bull or bear. Now from this line onwards, it is a bullish arrangement. As you can see here, new highs been made. The Chandelier exits fast is above the slow. It's the red line above the blue. And we have a pullback. And when price falls in between the red and the blue, that's an excellent opportunity to review price action. As you can see here, we probably have a bit of previous resistance come support. As you can see there, we get little springs, 1 over 1 bar, 1 over 3 bars, and then price moves up. Once again, we have the same scenario here where we have previous resistance become support, price goes quickly down, gets into there, and reverses back up. Now, when on the bearish situation, chart turns bearish between, chart is so it's bearish between those 2 points. That's because the red line is below the blue line. The red line is the fast line, and the blue line is the slow line. So we get a couple of opportunities. We get one there, and a bit around here to go short. But as you can understand, is that for a good trade, what we want to see up here, we don't want to see conflicting views. For example, here we have the red line below the blue line, which is not a good view for the bull setup. So therefore that's a fail on the bull setup. But because the red line is below the blue line on the bearish setup, that is an acceptable trade or position to go short in. But as you can see here, price is extended somewhat, but still the red line is below the blue line in the bear chart. If you go above here, you'll see the red line breaks above the blue line, which nullifies the bearish setup. What I'm trying to say is it's good to look at the bull and bear at the same time, because what you want to see is where there's no confusion between the bull and bear Chandelier exit. Now, for example, the swing scanner, I've added a color pattern onto the field called Extreme Move, and you'll get a blue shade where you get a clear Chandelier exits buy signal, and a red shade for a clear Chandelier exit sort of sell signal. Buy and sell signal basically sort of means it's a time to look at the chart to see whether there's a spring or up thrust. As I said before, a clear trade is when there's no conflict between a bull and bear Chandelier. For example, here we have a bull Chandelier, price goes down, swings back up. As you can see above here, the red line is above the blue line. That's a good position for the bull chart. But in the bearish chart, this is the red one. The red line should not be above the blue line. So that confirms it, because this pattern has no strength. That's good. Now you wouldn't actually get a signal in the swing scanner on these two patterns here because the close didn't actually fall below the red line. But there's plenty of signals to feed your appetite. Now that was all a bit confusing, but slow the video, go back and review the video, just quickly highlight it. You do not want confusion between the Chandelier bull and the Chandelier bear. So if you get a clean signal on the bull side. You do not want a clean signal on the bear side. You want the signal on the bear side to be confused. That basically means the red line above the blue. Here we got a clear signal because the red line is above the blue because it's a bull chart. This is a confused signal because the red line is above the blue, but it's a bear chart because of the settings of bear. Here you get a clear bear signal because the red line is below the blue because it's a bear chart. Here you get a confused signal because the red line is below the blue, and it's a bull chart. Just replay that again to make sure you're clear. You do not want confusion between the Chandelier bull and bear settings. Let's have a look at the swing scanner. So, okay, for the swing scanner, I've got what's this one? Coffee, I think. What is that? What is that? Cocoa. Anyway, so we've got cocoa loading up, and we've got a blue shade. It's a blue shade with a B. Okay, the B is I'll explain that. So here we have a nice strong step pattern, as I explained here. A nice strong Richard Wyckoff step pattern. The price has fallen back between the red line and the blue line. What the scanner does, it counts back 4 closes to see whether the close was actually positioned between the red and the blue line. Now this is a clear signal for the bull chart because the red is above the blue and close was in between the gap. If I go down to the bear chart here, you can see the bear chart is confused or doesn't have a clear signal because the red line is above the blue line. That means there's no strength in any bear signal here because you really want to see the red line below the blue line on the bear. So here we do not have any conflict between the bull Chandelier and the bear Chandelier. So the swing scanner would have sent off a blue shade at this level and at that level. So you would have had a chance to take a position in there or an options trade of any type you like. Let's have a look at another one. I suppose you'd be looking at a bearish one. Yeah, what's that one? UUP. Oh, I didn't explain the B, did I? That again. What's that one? Merck, it's a healthcare company. Okay, the B is once again the where have I got it? Yeah, the B reflects this point here, dot blue yellow. This is because the close in the last 4 bars hit the lower Keltner channel. As you can see here, the blue diamonds, another reason why you would get an A or a B. Okay, what's Merck looking at? Okay, this is obviously a falsie. What actually happened here, we have a clear signal with the red below the blue in the bear chart. Price broke above it. See how the couple of closes above the red line? Okay, but as you can see here, for this point in time here, the Chandelier bull did not give a challenge to the bearish position. That's why we've got a scan result showing a red shade. You have to understand the RTT rank is 62.7, so really bidding against the overall long-term trend is unwise. So don't do that. But that's what I'm trying to say. That's just trying to explain the signal you see in the swing scanner. It does highlight the shade when there's a clear signal and there's no conflict between the Chandelier bull and the Chandelier bear. One more quickly. What's this one? Oh, FXI, because old China's ripped up recently. Now the swing scanner, all members get access to the swing scanner. All members, apart from just the pure RTT Plus, they do get a limited version of swing scanner. Here we have FXI. Now China's been ripping up lately after they had their big, big conference. apparently having more children means you're going to be more popular, have bigger growth. Well, I wonder how that works in Africa. Anyway, back to the picture. Here we've got a bullish situation with the red line above the blue line, and we've had two instances where the FXI have been an opportunity to take positions. As you see here, because the red line in the bearish chart is above the blue line, there is no conflict. So any signals in the bull chart are clear and free to operate. That would have worked out well. That is the explanation of the Chandelier exit within the swing scanner and within the Richard Wyckoff price action roadmap. Thanks for watching.